Hi and welcome to the channel. In this video, we're going to talk about residential insurance policy. If you're a senior and you're on a fixed income, it's very important that you not only have insurance to protect your house, but also that you have the right type of coverage. Okay, we're going to talk about all the different parts of the policy of insurance, um, how much insurance to get, how do you know exactly how much you need. And lastly, we'll talk about some of the mistakes to avoid because they might be costly later. Most residential insurance policies are made of several parts, and how much coverage you have in each part will determine your total premium as well as how much you pay on a monthly basis. There are usually six parts to a residential policy of insurance. The first part is called the dwelling. The second is usually the other structures. Third is the loss of use. Fourth is property, personal property. And then you have the liability and then medical benefits. The first part is usually the dwelling. That's the part of the policy that covers all the structures in the house. Okay, we're talking about the walls, ceilings, the plumbing, the electrical, the entire structure of the house. Okay, so that if a house sustained a loss that was determined to be within the coverage of the policy, so that sections will cover it. A lot of times, clients ask me, well, how much coverage do I need? Because I really don't want to pay that much in the policy. I have a basic rule. Okay. Okay. My basic advice is uh find out how much it would cost to replace the house. Okay. For example, if let's say that the house catches on fire or something, and you hire a contractor and the contractor tells you, well, we'll build your house for like $350,000. Okay, so that would kind of be what you need. So you always want to have enough coverage that will essentially repair or rebuild the structure of the house. That's the basic rule. Okay, you want to make sure that your coverage is enough to repair the house. The next coverage part is usually the other structures. That usually includes fences, detached garage, gazebos, decks, and so forth. Okay, again, if you have if you have like a very big two-car garage, or you have a very expensive deck or very expensive fence, you really want to know exactly how much it would cost to repair or replace them. So, and you want to make sure that you have enough coverage in those sections to cover them in case of a loss. And in dealing with fences and detached garages, the one things that most people need to be made aware of is that if your next door neighbor's tree falls on your property due to bad weather and destroys either your garage or your fences, chances are his his or her policy of insurance will not cover it. Okay, it's really going to be covered by your policy of insurance. So you always really want to know exactly how much would it cost to repair or replace uh, the damage structured. Okay, again, the amount of coverage that you put will always have an impact upon your total premium. So you always want to make sure that you have enough in the policy to cover in case of a loss. The next coverage is the personal property. To me, that's probably next to the dwelling, the most important section of the policy. That covers all your items of personal property inside a house. We're talking about your clothes, or your electronic gadgets. We're talking about all the furnitures, your TV, everything, everything inside that house that really is not considered to be a structure. Usually, and this is really where a lot of people make mistakes. They don't do an inventory of everything that they have. I know it's a very tedious thing to do, but in case of a loss, you really want to be able to account for it because the insurance company is not going to assume how many TVs you had in the house, which type of sofa that you had. So you really want to be able to prove to them what you had. Usually, tell my clients, uh, first thing to do is really take pictures. Take pictures of everything in the house. One of the biggest issues that arises is exactly how much do you put in that section of the policy. Again, because you really want to get an idea is if the house was to catch on fire today, how much money would it take to replace everything that I have? So you do want to pick a number, something that you think will satisfy everything. Um, and you also need to take into consideration that depreciation in value in some of these items, because the insurance company definitely will do that. But it's important because a lot of times people don't take that into consideration, and they also have items in the house that are really have sentimental value, and later on they can't replace them. So it's very, very important to have an accounting of everything that you have, room by room by room. Try to assess a value to them. And so that when you're getting the policy, make sure that you have enough coverage in there. Example, uh, if you think that all your items of personal property in the house add up to approximately 150 to $200,000, you definitely don't want to have coverage where the limits of the coverage of $50,000. That's just will not work for you. So you want to have an idea exactly how much you will need to replace that and keep that in your mind so that when you're getting your policy, you will make sure that you and your family members are covered in case of a loss. The next section deals with loss of use. This usually happens when there's been a loss and for some reason it's been deemed necessary for you and your family to leave the house either for a short period of time or in some instances for a longer period of time. This section is very, very important because it affects, uh, your relocation, where you are going to stay during the period where the house is being repaired. This is the section of the policy that enables you to recoup your expenses from the insurance company. So in case of a short loss, if we're talking about staying at a hotel with your family members, staying at a hotel with your family members for 1 or 2 weeks, or we could be talking about a long stay where you may have to rent another house for 2 to 3 months if, for example, the house um, was deemed not to be inhabitable. Okay, the amount of coverage that you get there, and it's very important because if you do not have sufficient coverage, you may find that although you have a loss, you really have no place to go, and that's really a nightmare of a situation. So my advice to most of my clients is taking your family into consideration, taking your neighborhood into consideration, because you always want to stay as close to the neighborhood as possible. Another thing people also tend to forget sometimes, if you have pets, okay, sometimes even if it's short stay, the hotel that you're going to go to may not allow pets. It becomes very, very difficult to relocate. So you want to make sure that you have enough coverage in that policy so that you're able to relocate to a place that is comfortable and convenient for you and will be to the benefit of all your family members. The next section is the liability section. Um, this section covers instances where someone has asserted a claim against you due to bodily injuries or property damage. Okay, the standard residential policy usually has coverage up to $1 million. Again, like everything else, the amount of the coverage is directly uh, having an effect upon your premium. So on one hand, you want to make sure that you have enough coverage in case of a claim. On the other hand, you also want to make sure that your premiums are not too high so that you can essentially afford to make the premium, because it's an exercise in futility to get a very expensive policy if later on you find out that you cannot afford it and the policy ends up being canceled for non-payment of premium. So you pick something that you can afford. The next section is the medical payment that covers immediate small medical bills for guests who are injured while in your premises, regardless of fault. This was residential insurance policy in a nutshell. So whether or not you're getting a new policy or you're renewing your policy, please review it. Uh, Take a look at all the different sections. Make sure that you're getting the type of policy that you want. Make sure that you're getting the type of policy that you think you're getting so that there are no more surprises in the future. Now, once you have had the policy, um, it is also very, very important to be careful when you are renewing the policy. If you are making changes to the policy, how the changes are being made, and most importantly, you do want to be careful as to where you're getting advices or from whom you're getting advices, and make sure that you are getting the right advice, because a mistake to a policy of insurance can be costly. Case in point, very sad story. I had a client a few years ago, lived in the house. I think she was in the house for 25 years. She had a nice policy, covers everything. And 1 year, she went to her accountant because it was time to do her taxes. And for something I never really understood, um, the accountant, in his infinite wisdom, told her that he felt that she was paying too much on her policy and made some suggestion as to how much he felt she should be paying. He then referred her to a broker. So she got a substantial cheaper policy, but again, you get what you paid for. So she had the policy for about 6 or 7 months. Everything is okay. She was very happy with the premiums, you know, and but as we know in life, you get policy of insurance to cover in case stuff happens. And very often in life, stuff do happen. And unfortunately for her, she one day had a fire in the house and it completely ravaged a section of the house. And this lady had been in this house for a very, very long period of time. She had a lot of items of personal property in that house. Things that she had been saving for a very long time. Many of them are things that she wanted to pass on to her kids, you know, and so forth. Um, so she reported the claim to her insurance company. They came, gave me a call. I referred her to a public adjuster, and the guy went and took a look at the policy and took over the claim for her. And surprise, surprise, only to find out that when she made the changes to the policy, the reason why the policy became very cheap was because that she completely eliminated the personal property section of the policy. She knew the policy was cheaper, but she really didn't quite understand how and why it was cheaper. So we were able to repair the house, but everything that was in there that she had was lost and could not be replaced. So, the moral of the story is be careful when you're making changes to your policy. Read it, especially if the premiums are cheaper. You really want to understand why, because usually it's very rare for premiums to go lower unless for some reason you are reducing your coverage. It just doesn't happen where your premium are lower and your coverage remains the same. It just doesn't happen. So you want to take a look at the policy, you want to review it, and if you don't quite understand how the different sections of the policy and how they apply, I usually recommend people to call the insurance company directly. Or if you have an attorney, you can call if you have an attorney and who is well versed in insurance practice, then he or she might give you some advice. So, and be careful about making changes uh, because the $50 that you may be saving on a monthly basis will not be worth the nightmare that you want to endure later should there be need to assert a claim only to find out the policy does not cover it because you limited your premium to get a cheaper policy. Your home plays a significant role in your financial security, your physical safety, and your health over time. This channel focuses on helping you understand these connections so you can plan ahead and protect what matters most. If this was helpful, please follow for clear and practical guidance you can rely on.